Markets, or the S&P and NASDAQ, I should say, very close to record highs right now. What's your WEX word of the day? How do you see today shaping up?
Patience. I think every investor should have some patience. I think there's, even though it seems like, hey, markets are at all-time highs, there are still some things I think you can buy in this market at reasonable value.
All right, we're going to get to some of your reasonable values. I want to talk about something you sent to us, the Common Man CPI. As a week we saw retail sales disappoint a bit. You're looking at the consumer and how people are just dealing with rising inflation. We're going to show this Common Man CPI. Just tell us, what does this mean? Why should investors pay attention to this?
Yeah, so my friends at Strategic Research Partners actually put this together, and they look at things that the average person buys every day: food, energy, shelter, utilities, the cost of insurance, and those costs have stayed at an elevated rate. And you look at it the last 9 months, that Common Man CPI rate has been higher than inflation. So I think that's something that you have to look at on a regular basis, because that's the thing that people spend money on every single day. If you look at something like insurance, look even at a high growth state like Florida. I mean, there was a recent survey that said 12% of the people there were thinking of moving because the higher costs of insurance to live there.
In your mind, does that mean there are certain sectors that maybe you would stay away from with the thought that the consumer is continuously under pressure, and this data would lead to that conclusion?
Yeah, I would. Some, places like the discretionary sector. I mean, those are areas that I think that could come under increased pressure. I think you need to, in a market where inflation maybe isn't under control or as much as people think, I think you need to focus on things that are, everyday products and services.
So I want to get to your pick for us. We're going to show the mystery chart right now. It's Norfolk Southern. It's obviously a rail company. Had a lot of issues in recent months and over the last year overall. Why are you bullish on this company right now? We're showing the chart. Shares are down more than 6% year to date.
Sure. So an overall theme of ours is just, nearshoring and onshoring, right? A deglobalized economy across the world over time. And I think, when I look at a company like Norfolk Southern, it's underperformed some of its peers for different reasons. But most recently, an activist investor was involved. They tried to get rid of the CEO. They weren't successful. They did make some changes to the board. This is really a self-help story, and I think they can very easily cut some low-hanging costs, so some low-hanging fruit, cut some of the costs that are inherent in their business model that I think certainly some of their other peers are able to do. Their operating ratio, the lower the better. I think they can get that down over the next year or two, and it'll be a very attractive company. I mean, at the end of the day, rails are essential. It's an oligopoly in many sense, and if you think about some of the things you were mentioning in your earlier segment around e-commerce and shipments, and the more things are traveling in trucks and rails, I think the volumes will increase in the rails, and I think NSC is certainly a beneficiary there.
So, Patrick, really quick, we're going to do a quick check on our morning call sheet right now. We have Stifel. Right now, Stifel is raising their price target on NVIDIA, something we're watching here on CNBC. I want to get a sense of what your take is on this. The price target's moving from 114 to 165, citing longer-term growth and profitability.
Well, look, NVIDIA, obviously it's the largest company in the world right now. When you look at, the concentration in the market, I think it's very, very difficult for that to continue for a long period of time, but it has momentum at its back. And I think again, I don't think it's exactly an analog to Cisco back in 2000. Some people may have mentioned that, but I think, it definitely, from a valuation perspective, is well beyond what I thought they would hit. And I think to be concentrated in a name like that, I think that eventually that will eventually reduce over time. And I think NVIDIA is a little overvalued at this point.
Are there any other parts of the AI trade that you think are also overvalued that you would look to, if you had exposure to it, look to reduce right now while it's pretty close to all-time highs?
Well, I just think overall in the chip sector, you should reduce. Those are the kind of things, I think that have just gotten a little bit beyond themselves.